Well, hello everyone. Cynthia Tomaine here with Interactive Brokers, and thank you for joining today's webinar with Chaikin Analytics. Our presenters today are going to be discussing what is money flow and how we can interpret this indicator. And to deliver our presentation, I'm very pleased to have Pete Carmasino, who is the VP of Business Development at Chaikin Analytics. And we also have with us today Dan Russo, CMT and Chief Market Strategist at Chaikin, to deliver today's presentation. So please welcome me or join me in welcoming Dan and Pete to today's webinar. Dan, I'm going to go ahead and make you the presenter, so if you can share your desktop, we'll get underway here today. Thanks for
Great,
joining us,
Cynthia.
Dan.
Thank you. Thank you so much, and thank you everybody for joining us on a Monday afternoon. I hope everybody had a great summer weekend. I know we did here in New York, and hopefully everybody can see my screen now as we transition over from Cynthia's screen. And yeah, as Cynthia mentioned, what we're going to talk about is money flow and how can we interpret this indicator and incorporate it into our research and analysis process. And as Cynthia mentioned, the question box is open. If you want to fire in questions as I'm presenting, please feel free. My colleague Pete Carmasino is on the line as well, and he's kind of moderating the questions, and happy to call them out to me as they come in, or if you want to hold them to the end, that's fine as well. So let's kind of dive right in. Give you a little bit of background on myself first. I've been on the street for a little over 19 years, and if you count summer internships, closer to 25 years. I was fortunate enough to start working at the New York Stock Exchange when I was only 16 years old and started my career there. I am a former market maker on the floor of the New York Stock Exchange. In addition to that, I am a chartered market technician. So what that means is I've passed the 3 exams that allow me to use the chartered market technician designation, and I've had that designation for quite some time. I did get my MBA from Fordham University in New York. So on top of being a technical analyst, I also put a lot of thought and time into fundamental analysis and identifying good companies as part of my everyday process. I am the co-chair of the New York chapter of the CMT Association. It's one of the largest chapters, certainly in the country, if not the world. So that's a nice honor that I was asked to do that. Prior to joining Chaikin Analytics about 16 months ago, I spent 10 years covering large institutional investors. I sat on a sales and trading desk for an investment bank, and my clients were mutual funds and hedge funds and some large pension funds, mostly in New York and Connecticut and scattered throughout other parts of the country. A lot of the kind of big names that you've probably heard of when you read about or hear about mutual fund companies were former clients of mine. So that was a great experience, learning how these big money managers look at markets and look at stocks and run through their investment process. And then finally, most recently, I was asked to teach the technical analysis class at Baruch College in New York. So a little bit of a rivalry going on with the Fordham MBA, but teaching at Baruch. But that's been a great experience for me. I'm looking forward to picking that back up in the fall term. It's really given me an opportunity to dive in to a lot of the technical analysis concepts. And it's really true that if you really want to learn something, teach it, because you have to dive in, and the students in these classes, they're undergraduate seniors, eager to kind of hit the workforce and really interested in the market and market dynamics. So it really pushes me to be on top of my game. So that's just a quick bit about my background. As we think about the topics of conversation today, we're going to talk about what is Chaikin Money Flow, what does Chaikin Money Flow measure, how is it different from other volume indicators, and kind of how to look at it, and how do we use Chaikin Money Flow as part of our investment process. So let's dive in. Chaikin Money Flow was developed by Marc Chaikin, and it measures money flow volume over a specific period. And I'm giving you the formula here. The formula is in the public domain. Chaikin Money Flow Indicator is available on most, if not all, charting software packages. So basically, instead of cumulative total money flow volume, Chaikin Money Flow sums money flow volume for a specific look back period, typically 20 to 21 days. And we always get questions, why 20 or 21 days? And the simple answer is 20, 21 days, whatever you want, is roughly 1 month of trading. If you figure four weeks, throughout the month, 5 days of trading per week, you get to roughly 20, 21 days. The resulting indicator fluctuates above and below a zero line, just like any other oscillator, and chartists or technical analysts can weigh the balance of buying or selling pressure with the absolute level of money flow. And you can look for crosses above or below the zero line to identify changes in money flow. The way that I like to think about it is we're looking for changes in who's in control of that particular product, whether it's a stock, whether it's a commodity, whether it's an ETF. Who has the ball now and who's running with it? Is it the bulls or the bears? And we're going to show you what that means with some good examples a little bit later in this presentation. So just to kind of kick it off and show you what it looks like graphically, this is a chart of GE, General Electric, going back over the past year. And I picked this one because there are various points in time where both the bulls are in control or the bears are in control. And you can see here, Chaikin Money Flow is at the bottom of the screen. Here's the price chart, just a regular candlestick chart, nothing fancy going on here. And what you can see are times when the bears have the ball, and there are times when the bulls have the ball in terms of who has control of the stock for the time being. So just kind of keep that in mind as you're looking at some of the charts here. And what I really like about this is it gives you a lot more information than the typical volume chart. I think a lot of people use volume on their charts. You're all familiar with it. Kind of looks like this, right? Those sticks at the bottom of the screen. You see some jumps in volume, some ebbing and flowing in the volume. Again, this could be an ETF, it could be a commodity. We're just sticking with General Electric to keep the dialogue fluid here. And really, for me, it's hard to discern a lot of useful information based on what we're seeing in the chart here as it relates to volume. I mean, if we kind of quickly want to eyeball it, you could say that the majority of the time volume spikes during weakness and then it kind of ebbs as the stock recovers. But aside from that, there's not a ton of useful information in just the straight raw volume data. And in particular, since 2009, whether it's a market, whether it's a stock, whether it's an equity ETF, one of the big characteristics, I was actually just having a conversation with somebody about this recently, one of the biggest characteristics of the bull market since the lows in 2009 has been a tendency for a market or a stock to rise on declining volume. And then we see volume spike during sell-offs. And a lot of bearish investors like to point to volume. You know, they'll point out how market's making new highs, but volume is contracting. And while it's important to pay attention to that, I think it's important to understand the dynamics at play. And one of the dynamics at play in the market, as I said, is from 2000 over the past 10 years, really, what you've seen is a tendency for the market to rise on declining volume and then for volume to spike during sell-offs. And you can kind of see that here in the chart of GE. You can certainly see it in a chart if we looked at the SPY. So the key difference between Chaikin Money Flow and other volume indicators is that Chaikin Money Flow considers where a product closes in its range, in addition to that absolute volume level that was traded on a specific day. So in addition to this spike here, we want to know where the stock closed in the range because now there's more information there, right? The theory is that if a product closes near the top of the range on heavier than normal volume, it's a sign of accumulation. And then products that close near the bottom of their range on heavier normal volume are thought to be under distribution. And you can see how that's incorporated here. We're not going to geek out on the formula. This is going to be the end of it, but you can see how the money flow multiplier takes into account where the stock closes within its range on a given day, right? So then we can take that multiplier and multiply it by the total volume traded to come up with the Chaikin Money Flow Indicator. So that's the key difference when I'm thinking about Chaikin Money Flow relative to other volume indicators. And at the end of the day, that's what Chaikin Money Flow is. It's a volume indicator, but it's a more precise way of measuring who is in control of the market at the time being. And to understand this, it's important to understand that not all price moves are created equally. A stock may go up while we like to say hitting its head on a ceiling, or it could be bouncing off a floor. Chaikin Money Flow looks inside the trading activity to distinguish which price movements are likely to be sustainable and are supported by price and volume patterns, and which are not. And we look at two important factors to determine the likely sustainability of a price move. And we're going to get into those here, but just, closing performance. Has the stock been closing strong during this move? And in addition to that, here's where your volume confirmation comes in. Has the move happened on relatively high or relatively low volume? And notice the use of the word relatively there. We're looking at it relative to some look back period. So when people say, oh, hey, the stock is, the market's declining, is rising rather on declining volume, that might be true, over the course of the year, but what has it done relative to, the past month of trading? Buying pressure is represented by stocks which have been closing high in their daily range on higher relative volume, and selling pressure is represented by stocks which have been closing low in their daily range on relatively higher volume. So intuitively, that kind of makes sense, right? Who's in control here? And if you think about some of the dynamics of the market and the way large institutional investors work, and this is where my 10 years of prior experience comes into play, institutional investors tend to trade more heavily towards the end of the day. And if you think about, the closing price is often thought to be the most important price of the day, because that's the price at which investors are willing to take risk overnight, right? What happens overnight, there's after hours trading and there's pre-market trading, but those time frames tend to be less liquid. So a willingness to take risk overnight is really good information, and we can see that information using the Chaikin Money Flow Indicator. So let's take a look at what we mean by closing performance. All right, we look at closing performance, where a stock closes in its range for the day, because this determines the direction of daily money flow. Right, so a rising stock which closes strong over time is more likely to continue its upward move. And I've given you these are examples. These are not real stocks, stock A and stock B. If we look here, the green bar is the range of the stock on the day, and then the hash on the right side of the bars is where a stock conceivably or closed on the day. So stock A and stock B are both rising, right? This is the exact same price pattern, but notice how stock A tends to close near the highs of the day, and stock B tends to close near the lows of the day. Now, they're both still rising, but stock A is more likely to continue its uptrend. It's rallied to close near its daily high each day, and that's contributing to positive money flow, while stock B closes near the low each day, contributing to negative money flow. So that is what we're talking about when we're talking about closing performance. Where is the stock relative to its range on the day? Where did it close at 4 o'clock? From there, we look for a volume confirmation, right? The effect of volume, which will determine the magnitude of daily money flow, right? Performance on higher volume days is thought to be a truer indication of what market participants are willing to pay for a stock, right? And this is where the absolute level of volume comes into play and why it is still important, but we're just exploring different ways to look at it. So in this example below, same thing, hypothetical stock A and stock B. Both stocks are, kind of trading sideways, right? Alternating between closing strong and closing weak. However, if we look, stock A closes strong on higher volume days, right? Closes near the top of the range, higher volume. Closes near the bottom of the range, lower volume, right? And back and forth. Right? While stock B closes weak on higher volume days, right? Close near the high here, low volume. Had a higher volume day as we close near the low of the range. So stock A has the attributes that contribute to positive money flow, while stock B has the attributes which contribute to negative money flow. And does this make sense to everybody so far? Conceptually, you can understand what I'm looking at. If you just want to give me a yes, no, or I don't know, I'm happy to go back over anything that we've hit so far. Glenn, thank you. It's good. My time in the classroom has helped me articulate my presentations well. And then finally, once we have a feel for what money flow is and how it's developed, one of the best ways to use money flow is to look at It's persistency. John, thank you. I'm glad it's coming through clear. So what money flow persistency is essentially the amount of time money flow spends above or below zero, right? So when we're researching a stock, we want to look for evidence of strong money flow persistency, meaning significant regions of green over the last 6 to 9 months, and we want to prefer stocks with strong money flow persistency when possible. So, if you're looking at two stocks and they have similar attributes and you're tossed up between which one you want to buy, we advocate for erring towards the one which has stronger money flow persistency. And again, I've given you two hypothetical examples here, a bullish and bearish money flow persistency, right? So in the top panel, this is an example of bullish money flow persistency. You'll notice two things. Number one, it spends most of its time above the zero line, right? A lot of green in this particular chart. Number two is you'll notice that the highs in the green are much greater for the most part than the lows when money flow turns bearish. So this is a sign of bullish money flow persistency. And the flip side of that is bearish money flow persistency, right? And here's a great example. These are actual stocks, but I'm using it just kind of for illustrative purposes here. These are examples of stock. This is an example of a stock that's just kind of been under distribution, right? If we look back over the past year, significant amounts of red money flow or time spent below the zero line and only intermittent amounts of green money flow. So for the most part, we can think that this stock here is under distribution. And again, you can see aside from this one peak here, the valleys in money flow tend to be much greater than on the downside than do the peaks in money flow on the upside. So that's just kind of example of what money flow persistency looks like. Again, if you're tossed up between two different investments, all else being equal, we would advocate for erring towards the one that has a money flow pattern that looks like this over a money flow pattern that looks like this, right? And here's some real world examples. These are some charts that I put together last week. I just want to go out and say this is not explicitly advocating that you should run out and buy or sell any of these stocks right now. We're just using it for illustrative purposes. But here's a stock, Microsoft, right? We all know Mr. Softy, right? In a clear uptrend, right? And maybe you've missed this uptrend, or maybe you've not participated to the degree that you wished you had, and you want to try to gauge the likelihood of this uptrend continuing. Well, one of the tools that we can use for that is money flow, and in particular money flow persistency, which I've given you here at the bottom of the chart. Here's Chaikin Money Flow, and again, you can see what we're talking about, right? Much more green on this chart, especially since the start of 2019, than there is red. And the amplitude of the highs for the most part is much greater than the amplitude of the lows. I mean, look, when money flow does turn bearish, it gets down to about negative 0.1. But when it turns bullish, we routinely spike towards 0.3. Now, it runs between -1 and +1, right? So, readings of 0.3 and 0.4 are really strong. So as the stock is in an uptrend, one of the ways that you can confirm that uptrend and gauge the likelihood that that uptrend is going to continue is by using Chaikin Money Flow and adding this indicator to your toolbox. Another example from the same space, another software company, Cadence Design Systems. And you can see this is a great example because you've actually had a change in the personality of money flow, right? For leading up to the end of 2018, stock was kind of sideways with a downside bias, and you may have been tempted to go bottom fishing right in a stock like that. But if you check money flow, you could see that it was still under distribution, right? And look at these valleys in money flow, right? Getting down here to the 0.4 level, while the peaks barely register at a positive 0.1. And then the stock starts to reverse higher, and it's confirmed by money flow, and money flow has been persistently positive now for the past 6 months as the stock has been in a nice textbook uptrend, to kind of stick with the teaching analogy. And you can see here, right, strong valleys in money flow, and when when it does dip, it's negligible. It barely registers on the chart. And as we've kind of pulled back to test the trend line and started to work higher, money flow is starting to work higher again as well. But it's important to remember, we've looked at two examples of stocks, but for those of you who look at ETFs and trade ETFs as part of your process, we just looked at two examples of some software stocks. Same could be said for the software ETF. We're looking at the SPDR, Software and Services ETF, the ticker symbol there, XSW. And you can see just an example of persistently bullish money flow. Even as the stock has gone sideways, right, money flow stayed predominantly bullish. That was your indication that we were likely to see an upside resolution. And now we've kind of gone into this consolidation again, but for the most part, money flow has been bullish since the beginning of the year. So it's just an example of that money flow persistency lining up with a bullish trend in the stock. So kind of running through, what does bullish persistency looks like? These are three good examples. And honestly, if you look throughout the software space, you'll find a lot of other good examples of strong money flow persistency. And the flip side, just the opposite, weak money flow persistency. Here's Halliburton, a name that you likely know well in the oil field services space. And you could just see over the past 12 months, just persistently bearish money flow, with the exception of this one peak here. The readings have been much greater to the downside than they have to the upside, right? For a stock that's been under pressure actually for over 12 months, right? So there's an example of persistently bullish money flow lining up with a weak trend for the stock. So a lot of times you hear the argument, a stock's been beaten up so much, it has to be near a low, and you're tempted to, go bottom fishing. Take a look at money flow, see what the big investors are doing, or perhaps doing, to give you an indication if there really is a change afoot. Another example within the space is Oil States International, OIS, right? Similar dynamics at play. Persistently weak money flow, especially since March, with the valleys for the most part being much greater to the downside than the peaks to the upside. And even now, right, we're going sideways. Stock is still under distribution. Look at how persistently bearish money flow is. So this is just examples of persistently bullish and persistently bearish money flow. And again, you can take it to the ETF level. Looking at the Spider S&P Oil and Gas Services ETF, bearish for the past 12 months. At this point, you should be able to kind of give this back to me if we threw some examples up there and asked what you think. Just kind of steadily heading lower and steadily under distribution. Right? So when actually putting this into practice, something that we look for is either confirmation or divergence, right? Confirmation would be a stock is rising and money flow is green. That's what we would expect to see, right? But a money flow with divergence occurs when a price move is not accompanied by a similar change in money flow. Something we refer to as a negative money flow divergence can be an important indication of a potential short-term risk, right? Generally, money flow should correlate with price, right? Over time, as price goes up, money flow should get more green, and as price goes down, money flow should get more red, similar to what we saw back here, right? On the examples of bullish and bearish persistency, right? Getting more green as price goes up, right? But sometimes you'll see a divergence. So if a stock or an ETF has a short-term rally, or even a rally to new 52-week highs, as we'll see in a couple of examples, and money flow stays noticeably red, this could indicate a higher likelihood of a pullback or a change in trend. And a real-world example of that took place in Apple back in October of last year. I can't believe it's almost a year ago. But remember what was happening in September of October last year, right? Apple, the $1 trillion market cap, right, was all the rage. Apple was trading at or near all-time highs around the 230 mark. But look at what was happening as everybody was excited about that $1 trillion market cap and those all-time highs. Money flow was bearish, right? After being very bullish, money flow turned bearish as the stock was making all-time highs. This is a money flow divergence. This is investors using strength in the stock to get out or cut their positions. And look what happened shortly thereafter. Apple started to trend lower with some bearish money flow persistency. And then as Apple started to rise, money flow became persistently bullish. Well, look what's happening now, right? We had the May pullback and the market started to rally in June. Apple, goes along for the ride, trading from 170 back up here to about the 204 level. But look what money flow is doing. So this is just an interesting dynamic, not as extreme as what we saw up at all-time highs, but notice how this rally in Apple is being met with bearish money flow. Does that mean you run out and sell Apple? Absolutely not. But does that mean you sit up and take notice of a potential change afoot? I think so. This is an example of a near-term money flow divergence. Another example, currently, or as of when I was putting these charts together, would be Tesla, right? Tesla traded down to about the 180 mark, and it subsequently has rallied 50 points to about $230. But that rally has been met with bearish money flow. And you can kind of see it here. You can kind of see when the stock closes near the lows of the day. And what you should infer from that is that those weak closes, volume is higher on those days where the market is closing weakly or closing near the lows of the day. And that's contributing to that bearish money flow. So this rally in Tesla from 180 to 230 is giving us a bearish money flow divergence. It's an important concept that we advocate for, and I think it's something to keep in mind as you're running through your analysis, and something to look at. Again, it is not an explicit signal that you should blow out of your position in Apple or Tesla if you have one, but it is a sign that you should sit up and take notice that something might be changing. And what we always advocate for is to use Chaikin Money Flow in conjunction with other analysis tools, right? So here's a stock where you can walk through an example of how you could use it as part of your everyday process. For me, some of the indicators that I like to use, I love to look at trend, so a moving average. In this case, I'm using a 50-day moving average, and I always like to look at relative strength. We gave a presentation here a couple of months ago about the importance of relative strength, so it's something that I look at. I never look at a stock without checking its relative strength against the market. So here's a great example of Synopsys, right? Stock is above the 50-day moving average, right? So for all intents and purposes, for this time frame, we can say that the stock is in an uptrend. At the same time, this is just a ratio chart down here. We're looking at Synopsys, the ticker is SNPS, relative to the S&P 500. And when this line is moving higher, it means that Synopsys is outperforming the market. And when that line is moving lower, it means that Synopsys is underperforming the market. So we have a stock in an uptrend that's outperforming the market. So when we check money flow for a confirmation, what are we looking for? We're looking for bullish money flow and bullish money flow persistency. And you can see we have that here over the past 12 months, right? Spent more time above the zero line than it has below it. And the amplitude of the peaks is, for the most part, with the exception of this one blip back here, the amplitude of the peaks is higher than the amplitude or the drawdowns of the troughs. So this is just an example of how you can incorporate money flow with other technical analysis tools to confirm what those other indicators are telling you. And I'm not saying that you have to use these tools that I look at here. Maybe you're a shorter term trader and you want to use a shorter term moving average. That's fine. Maybe you like to look at MACD or RSI to get a gauge for momentum. That's fine too. When everything lines up for you, and then you can add in Chaikin Money Flow as being bullish or bearish, it's a sign that the stock is being accumulated, and it maybe supports what you're seeing based on your other indicators. So that's what I had here today for Chaikin Money Flow. I see that there are some questions. I want to get to as many of the questions as possible, and please feel free to send them in. I am going to stay on the line, as is Pete Carmasino. So I'm going to kick it over to Pete and Cynthia.
Hey, Dan, it's Pete.
Hey,
excellent
how are you?
presentation. Yep. Can you hear me okay?
I can hear you well.
Excellent. Well, it's great to be involved. You did a great job. You do, you get better and better every time you do it. So the explanation was great. It's good to be around you and learn. And it's also good to be with some of our listeners who are asking some really great questions. So A few of them, one of them was a question between Chaikin Money Flow and the Chaikin Oscillator. I think you kind of touched on it slightly, but the oscillator is more of a momentum, and you want to try to use multiple indicators together when you can. But if you want to go into that, we can. And there's some other ones that we're asking specifically about. The spider back in December, and I think you probably answered Eric's question. Eric, thanks for that question, by going and defining the money flow indicator about exactly how it works. And so when you look back at the spider, you can see that sometimes the SPY, the ETF, it looked like it was closing toward its high after the money flow had sort of declined, and it started to retrace a little bit. So if you want to talk about the difference between the oscillator and the money flow, just briefly, and maybe talk about, where you were looking when we were looking at the spider. Eric thought money flow seemed like it should have been deeper in the red, but if you relook at the chart, you can see that a lot of the times it was closing toward the high. So
Yeah, I
that
mean
would
that's going to
that
be
would
the
alleviate that.
that's the
Yeah.
key point, right? And that's the
Yeah.
key differentiator. The key differentiator here is where do we close in the range, right? And actually, I don't have the chart here, but a great illustrative example of that and why where we close in the range is important, as opposed to the absolute move on the day, is Boeing from back when, unfortunately, they had to, announce that a second one of their planes had crashed. If you look at the trading in Boeing that day, it was obviously a high volume day, probably one of the highest volume days of the past 12 months. But if you look at how the stock traded, the stock gapped lower and immediately traded down on the day before rallying to close near the high, right? So on a day when the stock was down, 5 or 6%, the fact that it closed near the high of the day on heavy volume actually contributed to a spike in money flow. So it's one of the nuances there, but it's a great example of why we're looking at where the stock closes on the day as opposed to the absolute move on the day. As in terms of the Chaikin oscillator, it's an accumulation distribution line, tends to have a shorter time frame than the Chaikin Money Flow Indicator. I'm going to be perfectly honest. I don't use the Chaikin oscillator very much. I use Chaikin Money Flow. Because to me, it feels like a more robust indicator, and it has a longer look back period. I think, if you're trading shorter time frames and want to dig into the Chaikin oscillator, it makes sense. But I like the longer look back period on Chaikin Money Flow.
Excellent. Yeah, and I think that you make a good point. I mean, obviously that's the nuance in the money flow, because you can see, and I think someone else kind of duplicated another question from Glenn. He had said, look, last month in the money flow has been bouncing up and down, kind of near the zero line on the SPY, and I think hopefully we covered that, Glenn, that you can sometimes see where the actual closes are and the money flow, how that's affecting the money flow, because that's what it's really measuring.
Exactly. And again, I think it's important to remember, like, as with any indicator that you use, it's a data point. It's a data point to help you gauge the odds of a trend continuing or reversing. So one of the data points that I've been noticing and noting for the past couple of weeks is just this, Glenn, that it's been bouncing back and forth above and below the zero line. So if I looked at money flow just in isolation, you might say to yourself, okay, things are neutral here. Maybe I should be using rallies to lighten up my position. But if you used it in conjunction with other indicators, right? And in particular, I know we're talking about the SPY. Well, what have we had for the SPY? Number one, we've had price, the most important data point, breaking out of an 18-month consolidation. We have price above rising moving averages. These will change for your time frame, but if you look at the 50-day moving average, the 200-day moving average, price is above those moving averages. And we've also, with the breakout out of that 18-month consolidation, we had a momentum confirmation. So yes, we do pay attention to money flow, but again, as with any form of analysis, we don't advocate for using one data point in isolation. So it's something that I noticed, and my commentary was, I want to see money flow start to get above the zero line. I want to see money flow get above the zero line. Market's breaking out. SPY is above its moving averages. Momentum confirmation. Add in strong money flow, and the odds of the trend continuing improve. And that's kind of how I look at it. At the end of the day, we're trying to gauge probabilities of a trend continuing or reversing. So as I looked at the SPY, Chaikin Money Flow was one data point, and an important data point, but when I took a weight of the evidence approach, there was more there than meets the eye. So it's a great observation, but I always advocate, don't use any indicator in isolation.
Yeah, I think that's a key point. I mean, and it makes sense, because look, that's why your knowledge in technical analysis is so vast, because look, there's not one or two indicators that are going to be, the tell-all sign for everything. So that's why you need to use them in conjunction. So it's always
Right,
great to
believe
have
me,
your insight.
I wish there was. I wish there was one indicator that said, when X, do Y, retire in 5 days. Right? It doesn't exist.
That'd be
It's a
great.
weight of the evidence. It's a weight of the evidence approach. It's a probability exercise, and those probabilities are always changing based on new information. So we just kind of look at it and take weight of the evidence approach. What's intriguing to me on this point is that with strong closes in the SPY on Thursday and Friday, we got a meaningful spike in money flow coming into the day today. If you look at SPY, I fully recognize that oscillation above and below zero, but we actually have a spike today. And that now kind of, what does that do? That increases the odds that the uptrend is likely to continue. Does it guarantee that the uptrend is going to continue? Absolutely not. But are the odds of it continuing higher coming into today than they were on Friday? I would say yes.
Excellent. Well, it looks like that's all the questions. I hope we answered everything. And as Cynthia said, this will be recorded. So I think I'm good on the questions here. So if you have anything else to add, Dan, I think we're done.
No, nothing else to add. Just want to say thank you to everybody for taking time out. Hopefully you found it educational. And if you do have any questions in the meantime, please feel free to reach out.
Okay. Well, at this point, what I would like to do before we close out the session, I'm going to grab the controls once again, and because I would like to let folks know how you can find the information on the Interactive Broker platform. Now, let me bring up first of all, let's bring up our website here, and do want to show you, well, I've already gotten to the place that I wanted to take you. But starting from our homepage, if you do go into the pricing menu and under research and news, you can find Chaikin Analytics. It's actually available. Simply scroll down or do a find. And notice here how we do have a selection on that Chaikin Analytics. I do want to point out there is a free 30-day trial period if you'd like to try out this subscription before registering. Now notice at the very bottom here, there are two additional links. One lets you know that it's available and integrated into the Trader Workstation, but you can also learn more about this provider here. Now notice when I go into the Learn More page, there's information on all of the products that are available, and by the way, it also shows you where you can subscribe to this service or to that free 30-day trial period. So I did want to point that out. Now, once you have come into this page, notice you can get access to the website, or what I will do is actually go back. Let me scroll back a page and notice, going into Trader Workstation. Well, I'm going to pull up the Trader Workstation here, and you'll see that underneath, I'm actually in the Mosaic, but I do want you to be aware that it's available in the Mosaic or the Classic version of TWS. I'll quickly jump into Classic and show you that you can access underneath the Analytical Tools menu. Notice here there is the analyst. Let me see. find the analyst information. That's I'm in our fundamental details, analyst research, sorry about that. And notice here is where you'll be able to find some additional information on Chaikin Analytics. So I did want to point that out. Same information is available from the Mosaic feature, but notice I'll go through the new window button and into our analyst research. Same information is available here, and if you do go into any of the Chaikin items that I do have displayed, let me see. Notice here, if you want to go into the information that we do have available, if you do not yet have access to it, you can actually go in through TWS and into that more information. So did want you to be aware that Chaikin is available. I'm actually just launching the account management screen, and notice here you can simply subscribe to it via account management or your client portal. So with that, do want to take a quick look to see if there's any additional questions. Looks like we've handled all of those questions that have been submitted. So we are coming to the conclusion of today's event. I do want to thank Pete Carmasino and especially Dan Russo for a terrific presentation with us here today. Do watch your inbox. We have been recording, and we'll send you a direct link if you want to revisit any of the concepts that Dan went over today. We'll be sending that out later on this afternoon. So with that, I also want to thank all of you for participating here with us today. Have a great rest of your day, everyone. And please all do remember to trade smart. Thanks, everybody. Have a good one.